Good afternoon, everyone. Welcome to the RegTech Association's RegTech Matters event with AUSTRAC. My name is 𝗞𝗲𝘆 𝗧𝙙𝗪, and I'm the CEO of the RegTech Association. I'd like to start proceedings today by acknowledging the traditional owners of the land in which we're meeting and pay my respects to elders past and present, and offer a very warm welcome to our Aboriginal and Torres Strait Islander friends with us here today, and a welcome to members and special guests of ours this afternoon. Thank you for being here. Today, we're delighted to announce that we have 337 registrations from 23 countries, which is the evidence base that financial crime risks remain in the top 5 of risks addressed by RegTech. So I wanted to acknowledge and thank you all for supporting us and being here. Today, we have the privilege of hosting AUSTRAC, who will be presenting their national risk assessment findings, which shed light on the evolving threats and vulnerabilities facing Australian sectors. This includes critical issues such as money laundering, terrorism financing, and proliferation financing risks. But why is this important? Financial crime doesn't just impact organisations or industries, it affects society as a whole. It undermines trust in institutions and endangers livelihoods, and in some cases, funds activities that threaten global safety and security. And that's why collaboration between regulators like AUSTRAC and the broader RegTech community is so vital. And so we thank AUSTRAC for their support of our organisation. When regulators like AUSTRAC actively engage with industry, they empower us to innovate, to adapt, and to collectively create safer societies. As RegTech providers, compliance professionals, and sector leaders, we each play a role in building a resilient financial ecosystem. And AUSTRAC's insights and expectations provide a roadmap for how we can effectively respond to emerging challenges, leverage technology, and ensure that we're not just keeping up but staying ahead. Today's program is more than just an opportunity to learn. You could also call it a call to action. It's a chance to better understand the risks that we face and the practical steps that we can take to mitigate them. And together we can strengthen our defences, protect communities, and ensure financial integrity in a rapidly changing environment. Before I hand over to AUSTRAC, though, there's a little bit of housekeeping that I'd just like to work through. Today will be recorded, and every registered delegate will receive a link to that recording. Cameras and mics off unless you are presenting. Thank you very much for that. And we ask that if you do have questions today of the speakers, please put those questions in the chat, please. We won't be turning on mics and doing open mic questions. Pop them in the chat, and I'm going to moderate today, and I'll pick them up there and pose them to the speakers as they come through. So without further ado, please join me in welcoming Hilary Randall and 𝗞𝗲𝘆 𝗧𝙠𝙬, who will guide us through the findings and insights from the National Risk Assessment. But first up, we're going to be joined by Hilary, who's going to talk to us about money laundering national risk assessments. Hilary has over 6 years of experience working at AUSTRAC across the regulatory division. As the manager of AUSTRAC's industry education and outreach team, she supports regulated entities, industry bodies, government and other partners through the provision of education and guidance on Australia's anti-money laundering and counter-terrorism financing regime and financial crime risks. Welcome to you, Hilary. Over to you.
Thank you very much, Deborah. Just while I bring up the slides for today, I just wanted to say a huge thank you to Deborah and the RegTech Association for having us here today to present to you all. It really is fantastic to see so many people interested in Australia's national risk assessments, and we're quite excited to share these findings with you. Now, hopefully that is loading for everybody.
Hasn't loaded yet. Oh, there we are.
Wonderful. So as Deborah announced, my name's Hilary and my colleague Nick and I are part of the Industry Education and Outreach team at AUSTRAC. So we're going to present to you on the National Risk Assessments, and I'll start with Australia's Money Laundering National Risk Assessment. So in July this year, we published 2 new National Risk Assessments, or NRAs, which I'll say. So one on money laundering in Australia and one on terrorism financing in Australia. And in December 2022, we also published a proliferation financing national risk assessment. Now, these are an important contribution to Australia's anti-money laundering and counter-terrorism financing regime, or AML-CTF regime. We completed the national risk assessments as Australia's financial intelligence unit. However, I do want to acknowledge that there were really important contributions made by Australia's national intelligence community, law enforcement and regulatory agencies, private sector stakeholders, and also international financial intelligence units. And their insights have helped provide a contemporary and a consolidated picture of Australia's risk environment. Now, we recognise that you as RegTechs play a really important role in assisting our reporting entities to meet their AML-CTF obligations. So we wanted to provide you with some of the key findings and methodologies that are identified in the NRAs and discuss how RegTechs can use these findings or methodologies to improve their solutions. So in August this year, our team delivered similar sessions to each sector that we regulate in Australia, and recordings from those are available on our YouTube channel. I'll start off with the Money Laundering National Risk Assessment, and then Nick will take you through terrorism financing and proliferation financing. Now, we won't be able to cover all the information in the National Risk Assessments. They are each hundreds of pages long, so I would encourage you to read those to get a more fulsome understanding of money laundering, terrorism financing and proliferation financing in Australia, as well as any specific threats and vulnerabilities that may be relevant to consider when you're supporting your clients. So in the context of the Money Laundering National Risk Assessment, money laundering threats refers to predicate crimes that generate illicit proceeds, and then those proceeds are laundered either in, from, or through Australia. And a predicate crime is basically any offence that generates proceeds of crimes. So this table here shows the threats that were identified in the Money Laundering National Risk Assessment. And as you can see, the 3 highest money laundering threats identified are illicit drugs, tax and revenue crime, and government-funded program fraud. And these are all assessed as high and increasing. And these money laundering threats also exist across all sectors in Australia. So let's look at Australia's illicit drug market. So this generates significant volumes of criminal proceeds that require laundering. We've seen that well-established money laundering methodologies continue to persist. So this is structuring and the use of cash, the use of third-party accounts, and the use of money mules. So where reporting entities could be exploited using those methodologies, AUSTRAC does expect to see this included in their risk assessment. We expect to see alerts included in their transaction monitoring programs, and we expect to see indicators included in their employee risk awareness training to identify these methodologies. Now let's look at tax and revenue crime. So many of the channels and criminal methodologies that are used to commit tax and revenue crimes are also used to launder the resulting criminal proceeds. For example, professional service providers like lawyers or accountants are used to establish onshore and offshore business structures and banking arrangements. And this is to hide transactions, assets, and beneficial ownership. So if your solutions assist with customer identification and verification, this is a key reason for reporting entities to identify the beneficial owners of their customers and assess the money laundering risk that they pose. Now let's look at government-funded program fraud. So like tax and revenue crime, money laundering techniques are essential to layer and to reintegrate criminal proceeds that are generated from this fraud. And this activity can involve inflating or falsifying invoices, overclaiming for services delivered, using stolen personal information to claim additional benefits. It can include using people with no criminal record to act as company directors, and illegal phoenixing, which occurs when a new company is created to continue the business of a company that's been deliberately liquidated. And this is to avoid paying debts like taxes or employee entitlements. So identifying customers' source of funds and source of wealth provides reporting entities with really useful indicators on whether a customer's funds or wealth might come from criminal activity like fraud. The Financial Crime Guide AUSTRAC, released in 2020 in collaboration with the National Disability Insurance Agency, is another really useful resource to help reporting entities identify, monitor and report suspected fraud against the NDIS. So it might be useful to all of you as well. Now, whilst it's not a high-rated threat, we did want to call out scams. So you can see that's fourth in the list on the table. Now, scams are assessed as posing a medium threat, but they were also noted as an increasing money laundering threat. And this includes scams relating to romance, investments, threats and extortions, employment, and also unexpected money. So money laundering techniques are required to layer and to transfer the proceeds of scams to the offenders. And some of the key methodologies that were identified for scams include the use of mule accounts, impersonating phone numbers or email addresses or websites of legitimate organisations, and creating fake ads, fake social media profiles, and fake reviews. We also saw that the use of digital currencies as a payment method has also increased significantly in recent years. Now, again, this information should inform reporting entities' AML-CTF frameworks. So then know your customer procedures should provide reporting entities with an understanding of their customers' source of wealth and funds and their expected activity so that they can better detect these threats. Transaction monitoring programs and employee risk awareness training should also be designed to detect the key methodologies for these threats to protect their business and protect their customers. So on the next few slides, we'll look at some of the specific money laundering vulnerabilities for a number of sectors and channels. I'll start with remittance and digital currencies. So as you can see on the slide, registered remittance service providers pose a high and stable money laundering vulnerability. Remittance service providers operating in Australia offer fast and relatively low-cost methods for transferring funds, both domestically and overseas. And this ability to move funds offshore quickly, easily, and at a low cost is really attractive to money launderers. The complexity of product delivery arrangements can also hide the source and the ultimate beneficiary of those funds. So registered remittance providers who use offsetting arrangements or provide cash to digital currency services likely pose a heightened money laundering risk, as do those who offer exchanges between remittance and digital currency. Now, the reason for this is that when value is moved offshore through digital currency without cash being taken out at either side, the transfer chain is less visible. So businesses offering both remittance and digital currencies may be more attractive for criminals who want to spread their money laundering activities to hide visibility of their transactions. Now, digital currency exchanges are assessed as posing a medium and increasing money laundering vulnerability. Now, you can see that there's a number of different ratings here. So the use of digital currency as a value transfer mechanism is assessed as posing a high and increasing money laundering vulnerability, while the use of digital currency as a store of value mechanism is assessed as posing a medium and increasing money laundering vulnerability. Digital currency exchanges offer speed, they offer global reach, pseudonymity, and they can facilitate funds flows to and from foreign jurisdictions with really low visibility. The near instant and irreversibility of those transactions does present a persistent challenge in detecting and disrupting illicit transactions before funds leave wallets. The operation of digital currency ATMs is also an emerging vulnerability. It allows criminals or their victims to buy and sell digital currency with cash. So reporting entities offering this service are exposed to cash-related money laundering vulnerabilities as well. So now we'll look at banking. Major banks, other domestic banks, and foreign subsidiary banks pose a high and stable money laundering vulnerability. Given their central role in the Australian economy and in the global payments ecosystem, most money laundering activity will intersect with reporting entities in the banking sector at some point in the transaction chain. Major banks are almost certainly exposed to the majority of money laundering risk facing the banking sector, and this is given the size of their customer base, the scale of their operations, their cash transaction infrastructure, and their global reach. Other domestic banks offer extensive and diverse products, services, and delivery channels, and this provides money launderers with more options to move large volumes of funds. Most large banks offer retail and corporate banking streams, and they carry different money laundering risks. So retail banking is exposed to high volumes of low to moderate value transactions. This includes anonymous cash transactions and often incorporates digital channels for service delivery. Corporate banking is generally exposed to money laundering through large transactions and higher risk customers, such as complex legal structures or the use of professional service providers. Banks that offer corporate banking products and services in addition to retail products and services are exposed to misuse of trade finance facilities. And corporate banking products such as trade finance are also exposed to trade-based money laundering activity. Foreign subsidiary banks are generally more exposed to foreign jurisdiction risk, and this is because they offer products like foreign currency exchange accounts, and they're favoured by customers with links to offshore entities. Mutual banks are assessed as posing a medium and stable money laundering vulnerability. Criminal exploitation of mutual banks generally involves incoming electronic transfers from accounts held at major banks or other large domestic banks. Mutual banks that offer cash facilities are also exposed to the direct placement of illicit cash into customer accounts. Foreign bank branches are also assessed as posing a medium and stable money laundering vulnerability. Foreign banks face a distinct money laundering risk profile compared to other banking sectors. This is because they provide complex, customised financial products and services for cross-border trade and investment to a smaller number of high-value customers. The risk assessment identified two key money laundering vulnerabilities for foreign banks. Firstly, the exposure to high-risk customers, and secondly, the products and services that can be used to store and to move funds into and out of the subsector. Now, these are a key vulnerability, such as accounts, including transactions, savings, and foreign currency accounts, international funds transfers, and corresponding banking services. Foreign bank branches may be attractive to sophisticated criminal threat actors who have the access and the expertise to establish structures to exploit them for money laundering. Now, pubs and clubs, they also continue to pose a medium and stable money laundering vulnerability. They're likely used by a small number of criminals to launder funds at scale. We've seen that opportunistic offenders are likely to use pubs and clubs to launder smaller amounts of criminal proceeds. Pubs and clubs are widely available, they're really easy to access, and the money laundering methods are well established, and they require very little expertise or knowledge. The money laundering vulnerability primarily stems from a high volume and value of transactions, and this includes cash transactions, but also their exposure to high-risk customers. Australian pubs and clubs offer a range of different gambling services. This includes electronic gaming machines and also cash redemption terminals. So illicit funds can be easily transferred between those various gambling formats in the one venue, and this can really complicate tracking and tracing of fund movements. Now we'll look at financial services. So stockbrokers and securities dealers are assessed as posing a medium and stable money laundering vulnerability. They can be exploited to generate criminal proceeds from fraudulent activities like market manipulation and insider trading, as well as tax evasion. So in these instances, criminal proceeds are generally already placed in an investment product, and then they're either withdrawn or layered and integrated into the wider financial ecosystem. The volume and the speed of transactions, combined with the increasing use of online services and trading platforms, creates challenges for transaction monitoring. Reduced visibility of underlying customers in transactions is also a vulnerability. This includes where there's multi-layered trading chains, legal persons and arrangements with complex ownership structures. It includes the use of overseas-based agents and also funds transfer requests to third parties. Another vulnerability is the availability of services that enable off-market transfers, where ownership and value in shares can be transferred directly between entities, and this includes across jurisdictions. Superannuation fund providers are assessed as posing a medium and stable vulnerability. The sector is vulnerable to criminal exploitation due to its large customer base, the use of remote and online delivery channels, and difficulties in verifying sources of funds for voluntary contributions. This limits visibility and it allows criminals to conduct transactions without raising suspicion. APRA-regulated funds are likely less attractive to money launderers due to the involvement of an independent third party to release and invest the monies in these funds. The risk assessment also found that criminal proceeds can be placed into a superannuation account via voluntary contributions. Superannuation accounts can be fraudulently accessed. This includes by individuals known to the member or also by criminals using stolen identities. And illicit funds can then be stored or layered through staging accounts, ultimately withdrawn as seemingly legitimate superannuation benefits, or they can be transferred to third-party accounts, including in foreign jurisdictions. Superannuation accounts will continue to be used to store criminal proceeds derived from other predicate offences, and in particular, this includes fraud. Non-bank lenders and financiers, custodians and asset custody services, and managed investment schemes have all been assessed as posing a low money laundering vulnerability. Now, while the risk assessment doesn't provide information on low-rated sectors, it's really important to note that these businesses may provide some of the same designated services as banks or as superannuation fund providers and stockbrokers and securities dealers, which all have higher money laundering vulnerabilities. Additionally, while the low-risk rating remains stable for some sectors, the outlook for non-bank lenders and financiers is noted as increasing. So it's definitely worth reading the 2021 sectoral risk assessment for a more comprehensive overview of specific money laundering vulnerabilities for that sector. Now, the NRA also found that money laundering endures through channels with the capacity to process high volumes of cash. Domestic criminals continue to exploit cash as a value transfer mechanism, as well as to store value. So common money laundering methodologies involving cash include structuring, third-party deposits, commingling by cash-intensive businesses, money mules, and bulk cash smuggling. Now, again, there are a number of other sectors and channels that are identified in the Money Laundering National Risk Assessment as posing specific vulnerabilities in Australia, and we haven't discussed those today, and this includes Tranche 2 sectors. So I definitely encourage you to read the risk assessment for further details on each sector and channel, including the key judgments, the domestic context, and the outlook for the next 3 years.
As Hilary discussed, as well as money laundering, comprehensive assessment of terrorism financing risks and channels is critical to the implementation of FATF's Recommendation 1. Australia is committed to ensuring the country and its financial systems are resilient in preventing the financing and supporting of terrorism, both nationally and overseas. Australia combats terrorism financing through a well-established, robust counter-terrorism financing regime, which forms an important part of country's national approach to counterterrorism and violent extremism in all forms. Unlike the 2014 terrorism financing NRA, the recent NRAs consider financing risks associated with all forms of violent extremism and acts of terrorism. So regardless of whether the activity meets Australia's legal threshold for terrorism financing. The financing of non-violent forms of extremism are outside the scope of this assessment. And it's interesting to note that at the time of publishing the NRA, Australia's national terrorism threat level was categorized as possible. It is important to note that Australia's national threat assessment level was more recently increased to probable by the Australian Security Intelligence Organisation, also known as ASIO. So politically motivated violence now joins espionage and foreign interference as principal security concerns for Australia. Next, we'll look at the terrorism financing process usually involves three distinct stages. First being raising funds through donations, self-funding legitimate business or criminal activity, moving funds to a terrorist network, organization, cells or individuals, or between such entities, including the storing of funds. And lastly, using those funds for direct, which is operational, and indirect, which is organizational costs that are associated with terrorist activity. We'll also talk about some of the key risks identified from raising funds and moving funds further. So you'll see in this slide some of the highest risk channels or methods used for raising funds. For each of these, the table shows how the level of risk has changed since the release of the regional TF risk assessment that was back in 2016. A risk rating of the current overall assessment for religiously and ideologically motivated actors, and an assessment of how the risk is likely to change over the next 3 years. Self-funding remains the main method of ideological and religious terrorism financing in Australia and is assessed as a high risk, which has remained stable since 2016. It generally involves very low to low value transactions, example between $5 and a few $1,000s. This and the fact that funds are almost always sourced through legitimate activity makes it very difficult to detect, distinguish from ordinary behavior. The overall risk rating that social media, communication applications, and crowdfunding platforms are used by Australian violent extremists to connect, inspire, and raise funds is also assessed as high. The level of risk has increased since 2016, driven by product availability and greater uptake of these technologies. This also refers to the misuse of social networking and content hosting platforms, internet communication applications, and crowdfunding platforms that are used by violent extremists. Payments can be made in the online funding ecosystem in a number of ways, including transfers or deposits into nominated bank or remittance accounts, contributions made directly through platforms in the ecosystem which are facilitated by online payment service providers, or transfer of digital currency. Finally, the overall risk rating of Australian registered charities and legitimate non-profit organizations, also known as NPOs, are used to raise or divert funds for terrorism financing is assessed as medium. This has remained largely stable since Australia's sectoral risk assessment back in 2017. Registered charities and legitimate non-profit organizations can be established with the genuine intent to undertake charitable activity, but is unintendedly illicit diversion occurs mainly downstream. This usually involves an NPO that is acting in good faith, but has limited controls or availability to ensure funds are used for its intended purposes. suspected terrorism financing plots involving legitimate NPOs have largely involved simple methods from raising to moving funds overseas. Donations are accepted by direct bank transfers, online payment service providers, cash, and now increasingly digital currency. Traditional banking and remittance service providers are commonly used to move funds overseas. Informal remittance channels such as Hawala and cash couriering are also used to a lesser extent, particularly by NPOs that have been de-risked by major financial institutions. The outlook for registered charities and legitimate NPOs is assessed as dynamic, which means it's likely to change, but the trajectory is undetermined and largely dependent on external drivers. So the second stage that we'll be looking on is moving funds. The small scale of terrorism financing in Australia and the use of less sophisticated methodologies means that few channels and methods appear to be exploited. On this slide, you'll see a list of channels and methods used for moving funds. Terrorist financiers prefer readily available and proven methods to move funds, such as banking, remittance, and online payment service providers, over complex schemes. The current overall risk rating of the banking system being used to move and store funds for terrorism financing is assessed as high, as banks continue to be a reliable and efficient way to move funds nationally and globally by threat actors. Terrorism financing risk is concentrated in retail banking, which is exposed to high volumes of low-value transactions. Transaction accounts and electronic funds transfers are particularly attractive to terrorism financings as they allow for rapid, reliable, and easy collection and storage and moving of funds both nationally and globally. The overall risk rating that remittance services are being used to move funds for terrorism financing offshore is also assessed as high, as remitters continue to provide a proven channel for financing terrorism. Remittance providers are particularly popular for funds flows to places where formal banking networks may not operate. That includes high-risk jurisdictions, and are used to transfer funds overseas by both ideological or religious actors. Religious actors are sometimes linked to the remittance service providers they exploit. Methods to remit funds are largely unsophisticated. In most cases, little effort is made to hide the source and destination of funds. However, third-party intermediaries are sometimes used to complete remittance in order to hide the end beneficiary of illicit transfers. Now let's look at the non-banking online payment service providers. These are third parties which provide services for merchants to accept online payments by linking customer payment information to the merchant's accounts, and are securely facilitating the transactions between the customers and merchants' respective financial service providers. The risk of this sector being exploited to move funds for terrorism financing is also assessed as high. The level of risk has increased since 2016 in line with its increased uptake by the general community. The sector facilitates a range of low-value payments, onshore and offshore, for illicit actors across the ideological and religious spectrums. Few examples of sophisticated activity that has been observed, however, some individuals without a criminal record have allowed their accounts to be used for fundraising campaigns linked to nationalist and racist violent extremists to help avoid detection. So the risk of digital currencies being used to move and store funds for terrorism financing is assessed as high. The level of risk has increased since 2016, driven by the technological and product advancements and greater consumer uptake of this. The use of digital currency by violent extremists across the ideological and religious spectrums is increasingly identified in Australia, and the Hamas-Israel conflict has also caused an increase. In Australia, recent detections include direct low-value cryptocurrency flows from Australian entities to wallet addresses reportedly controlled by offshore terrorist organizations. As with money laundering, vulnerabilities are presented by speed, global reach, and pseudo-anonymity and anonymity of transactions, as well as the irreversibility of these transactions. The digital currency ecosystem will remain attractive to terrorist financiers as long as it maintains its core features of privacy, pseudo-anonymity, and accessibility. As you can all see in this table, non-banking lender financiers, stockbrokers, and security dealers are identified as methods for moving funds. However, the overall risk rating for non-bank lenders and financiers to be exploited by threat actors for moving funds is rated as low for violent extremists across both spectrums. And the overall risk for stockbrokers and security dealers exploited by threat actors for moving funds is rated to very low for the extremists across both spectrums. Other financial services were not identified in the risk assessment for moving funds stage of the terrorism financing process. Lastly, the overall risk rating of casinos, betting agencies, and other gambling activities being used to move and store funds for terrorism financing is assessed as very low. That is for both religiously and ideologically motivated violent extremism. I encourage you all to read the Terrorism Financing NRA to get a better understanding of the sectors and the channels that we have discussed today that are used to raise and move funds for terrorism financing.
Thank you very much, Nick. Thank you, Hilary, and thank you for Leanne. I know you're online as well. Hilary spoke of the complexity of the vulnerabilities in the system. And we also heard from Nick about, the risk level for things like ideological terrorism has risen. And I think this all points to the criticality of us all coming together as a community to collaborate, to develop, the right compliant products and services for the clients to help mitigate some of these risks. So I'm very grateful. Thank you very much to AUSTRAC for being with us today. And I'm very, very grateful for the wonderful relationship that we have. Now, I've popped up a poll, or more correctly, Nathan has popped up a poll there. Please give us a quality rating. We really appreciate that. And we do take all those ratings quite seriously. And so just in wrapping up, I wanted to let you all know that on the 5th of December, we have our final RegTech Edge No Borders program for the year. It will be focused on data, cyber security, and information security. There will also be a link in the wrap-up message following this event if you want to register for that. And then later on this week, it's very exciting, and I alluded to it in the chat. We'll be launching our 2024 Industry Perspectives Report called Protecting People, which is our strapline since all the way through this year and will be going into next year. There's some really, really interesting things in this report, including what Hilary was talking about, the rise of fraud and scams. We will have a focus on that in 2025, but there's lots in that report. So I hope you enjoy that. And given that you were already on our database, you will receive a copy of it a bit later in the week after it goes to the media. So without further ado, once again, thank you so much for being with us. We will send a thank you note out with the recording tomorrow, and we hope to see you at one of these events again soon. Thank you so much.